Hi, good evening. This is Scott at Scott Trades on Twitter with StockMarketMentor.com and your chart of the day. Now, I'll be honest with you, there is a lot of ugly charts in this market. I could rail through a couple of them right now. Apple, blah. Amazon, blah. Alibaba has been blah for a while. So we'll just stick with the SPY because I really want to talk about how I trade and how I stay safe in this market. Dan and I did a webinar yesterday with members, and we talked about some strategies that I use to really just kind of avoid a lot of volatility in this market. One of those strategies is strictly just focusing on the SPY and the 50-day moving average. So if price drops below the 50-day moving average here on the SPY, chances are I'm not involved in the market. I've typically been stopped out of my stocks by then, and I'm waiting for some sign of reversal. And sometimes that means that I end up having to buy higher. But when I am buying, a lot of times that keeps me in, kind of a safer position because I have a level to define my risk off of. So I'm going to play a clip from our live webinar that we did yesterday for premium stock market members, and then after, come back and give you some strategies for being open-minded during times like this. This is how I try and stay safe in the market. And, as you can see from this chart, when I want to get aggressive in the market, and when I want to get long stocks, typically is when the SPY is above that 50-day moving average. And when the SPY is below that 50-day moving average, that's really the time where I want to be hands off. And so if you are, new to trading or, just trying to figure out why you keep losing money in this chop, the highest probability setups for me come when the SPY is above the 50-day moving average. And so that's what I use as my guardrail. Dan, you're talking about, getting those account higher lows, as you're saying, you want your account to have higher highs and higher lows. And so the way that I protect my higher low from becoming a lower low is just by using that 50-day moving average as my account guardrail.
I think those are great rules and great methods of making sure that you're staying on the right side of your equity curve. Guys, listen to what Scott's saying. How long you been working with me, Scott?
Since 2018.
God, it's been that long?
Yeah.
Wow.
I think so.
Okay.
I've lost track, man. I'll be honest.
Well,
The last few years have been a blur.
Okay. Anyway, so what Scott's grown so much. It's just been, I would say I'm really proud, but it really wasn't any of my doing. He works his butt off. If you want to be really successful at trading, you have to work your butt off too. You really, really do. You can't just say, well, I want to be a good trader. Okay, great. I want a quarterback for an NFL team and break all kinds of records. It ain't going to happen. I missed my window. And so you need not just a desire to be successful, you need a burning desire. It's the kind of thing that you're thinking about this stuff all day long. Doesn't have to be at the forefront of your mind, but it's back there rattling around in your brain someplace.
Okay, so like Dan said, it takes a lot of hard work to be a consistently profitable trader. And it took me years to develop a strategy that worked for me. And if you're struggling in this market, then chances are you need to focus on a strategy that works for you. And when the market is whippy and choppy like this is a great time for you to study your past trades and look at the entries that you made that were successful and the entries that you made that weren't successful, and compare the two. Compare the two chart patterns. Compare the entries to each other. Another note that I want to pass along in this market is not to get overly bearish for too long. Now, yes, the market is not in great shape, and it could not be in great shape for quite some time. We don't know. But I know that it's really easy to get stuck into a narrative whether it's a really bullish narrative or whether it's a really bearish narrative when price is confirming that narrative. And so as we get closer to the 200-day moving average here on SPY, I just want to stay open-minded to buyers coming in and potentially supporting price with some sort of base of consolidation. So that's what I'll be looking for as we bump around the 200-day moving average here on the SPY and on QQQ. Now, it's not because I don't believe that the market can go lower. I certainly know it can, and I lived through and traded through this fall from back in March of 2020. So I definitely know that things can come off the rails really quick. And so if I am focusing on being bullish when SPY is above the 50-day moving average, I don't have to worry about catching any bottoms. I just have to be open-minded to price stabilizing and getting back above that 50-day moving average. So that's what I would focus on in this market. I would just focus on stocks that are able to get back above their 50-day moving average, because that is a key institutional moving average. And if stocks that you're looking at can't get above, can't hold above, can't stay above the 50-day, then they're not being supported by institutions. So just a couple tips that I hope you find are helpful to navigate this market. And if you need help trading, come and see what we're doing over at StockMarketMentor.com. We do live webinars all the time. We answer your questions. We look at the charts, and we really dial it down into sound trading practices. So I hope that's helpful. I hope you're safe in this market, and I hope to see you on the other side.